Welcome everybody. Today is Thursday evening, March 21st, 2019. Hard to believe it's March already. Late March, actually. Just had spring sprung yesterday. Tonight's webinar is Learn 3 Great Trade Types. First, we've got to knock out our standard disclaimer, so let's take care of that right now. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then, let's get her going. Let's get over to some charts here. What screen is that on here? Number 1, I believe. And come over here. So before we get started, I'm going to just jump ahead a little bit and ask a question. I really, for those of you that, have been around for a while, you know that I really like to make my these webinars very interactive. We're going to go back and forth a lot. I'm going to ask a lot of questions. We're going to look at all kinds of different chart setups. And so, the whole idea with these exercises is that you come away with a good understanding of, how and where to take these trades. Now, for those of you that are on a 1-week visit or a free trial, you are looking at a E-mini S&P futures chart. Yes, all the equity markets are on the June contract. So namely, that would include EMD, Midcap 400 futures, the ES, of course, NASDAQ E-mini futures, and Q, that's $5 a tick. The Russell mini futures, we're going to look at that chart in just a minute. And then, of course, YM, which is the mini Dow, also $5 a tick. Now, in the room, you're going to see charts of ES and the Russell RTY that Gary and I make active calls on based on the volatility in the morning. We're in there a little over 2 hours. Of course, we trade crude in the room too. Most of you know that. A lot of you trade crude. And then, of course, we have the gold chart in there as well. We'll look at a little bit of gold later too. And so we're connected to a data feed from our broker. This is a 4-range chart. All of our charts are 4-range. They have been for the better part of 9 or 10 years now. We prefer that to time-based charts because of the consistency of the bar size. We are running exclusively on the NinjaTrader platform. You can download it at ninjatrader.com. For when you use it in demo, you can use it for free. And the indicators that you see on this chart are indicators, C-sharp scripts that we here at Viper have developed over the years. Namely, those include the background colors. So just real quick, when a market is trending down, generally speaking, the background is going to be red. When a market is in an uptrend, the background generally will be green. And when the markets are chopping around, you're going to see kind of a striped shirt effect like you see right here. We'll talk about how to handle that also in a little bit. Then, of course, if you didn't have our indicators on here, you would just see plain bars. It would be very difficult to see where to get in and out and how to take a trade. So we've come up with these bar colors, red, yellow, and blue. We have the stealth line, which is the sort of sneaky looking line. There's a red version when the market goes down, green version when the market goes up. Of course, we have the power meters. These are the 4 different trends on the chart. Those turn green and red as the market moves around. Predictors, of course, swing levels. And then the most prominent thing, of course, is the mid-band in the bands, which is the thick, solid line right here. Is called the mid-band. Features prominently in our trading. You've seen it in the room, and a lot of the trade calls center around that, and that's actually what we're going to teach is trade type 1 will be mid-band type trades. And then, of course, you have 4 bands below, 1, 2, 3, 4. The thin red line on top of band 2 is called line 2. Okay. And then you have bands number 5, 6, 7, and 8. 8 being the outermost band up here, and the thin green line being line 6 on top of band number 6 right here. Okay? So in a nutshell, that's what you're looking at on this chart. That's our indicators. And before we get into trade types and trade entries, we need to get on the same page as to how we look at markets, how we determine what types of trades we're going to take, and that namely that means either long or short. In other words, are you buying a market or are you selling it, right? And so let's go through a couple of things here, so we all get out of the gate on the proper page here. So when you have a market like this one here that is heading down, what type of trades do you look to take? Long trades or short trades? So I'm referring to the market between, oops, let's make this line a little bit bigger here. I think I changed it earlier today to 201. There we go. All right, so I'm referring to this area right here. This area right here would, in this area, if you were trading it, this would have been yesterday early in the morning on ES. Were you, S for short, were you shorting this market? Or L for long? Are you buying to get long in the market right here to the right of this? By the way, I'm here in California, so adjust this to your, this is all Pacific time. If you're back east, add 3 hours, of course. Midwest, add 2 hours. 6:30 is the open of the equity markets, so that was right in here. So coming in from the pre-market into the equity market open, were you shorting ES or buying it? I see a lot of S's. Short, short, short. Good. So in a downtrend, we're looking to take shorts. Now, at a very fundamental, basic level, something that you should just sort of embed in your subconscious, and over time, as you learn to trade, a little bit better and you gain your skill sets, we know that markets have what's called thrusts and retracements. So let's look at how thrust and retracement works in a downtrend. So here, normally at the beginning of a trend, in this case down, let me blow this up so we all really get a good picture of how this works. Okay, hold on. Let's really blow it up real good. All right, there we go. That's perfect. So when the characteristic of a downtrend is that the first part of it is when the thrust in the downward direction occurs. Generally speaking, those bars will be red, primarily red. You will notice the presence of a red stealth line like this. You will break support levels and go into perhaps fresh lows for the day or the morning or whatever. And the other prominent thing, of course, on here is the fact that the midband and all the bands start to stair-step down like this. And the background turns red. You can see that we're very clearly in a downtrending market here. So we have to be careful that we don't buy or sell the thrust portion of a market move. We have to wait patiently for retracements. Now let me show you some retracements. Here's an example of one right here. And then you get another thrust, and here's another example of one right here. And I'm going to show a couple other ones real quick here. Here's another one right here. And here's another one over here. Now let's not think too much about the we don't look at the volume, Chandra. We've looked at the possible, we went through the whole gamut of indicators, moving averages, CCI, MACD, RSI, stochastics, all manner of things. You've seen charts where there's so many indicators down here you can't even tell what's going on. And then you got volume profiles. Trust me, over 20 years, I think I've seen pretty much every indicator that's out there. We like this setup because it's very clean, it's pure, it doesn't have 15 decision points to decide where to get in. And the trades we're going to teach you today, I'll do part one. This is part one, so it's kind of an introductory kind of thing. And then part 2 is on Saturday morning, where we'll get into a lot more detail on more complicated trade type setups. Okay. So when you're in a downtrend, the way this works is, you've heard in the live trading room. Well, we're going to get into that right now, Jai. We're going to look at the 3 types of trades. So let me just put this up here so we all get together on it. So when you're in a downtrend, generally speaking, that means short trades only. And that would be, and those would be taken, short trades are taken on retracements up to resistance levels. Okay? We'll get into that, Jai. I see a lot of questions coming in. We're only about 12 minutes into this. Do me a favor. If you have some questions, just sort of hold on to them for a little bit and just be a little bit patient. Give me about another 20, 25 minutes or so, and it'll start to become clear exactly how you're going to take these trades. Okay, so just hang tight. Now, the 3 trade types in a short trade entries on a downtrend are as follows. Let's do it this way. Let's do it this way. Let's do number 1 would be mid-band. We call it kiss and roll. Market rolls over. Okay. Number 2 would be a minimum criteria. Short trade entry, and that means that it has to close above stealth and line 2. And the 3rd type is shorts in a downtrend are what we call deep retracements. You may even hear something to the effect of a phantom. A phantom is just another word for a deep retracement going to the opposite end, and we'll look at those. And those can go all the way to, in the case of the short, can go all the way to line 6. Okay? So let's take a look at each one of these 3 trade types in a downtrend. So the first one is going to be the mid-band, kiss and roll. Now, when you're looking at this chart, the definition that we have of a mid-band trade is as follows. Anywhere on the mid-band itself, bars landing on the mid-band itself. Here's an example of some bars on the mid-band right here. See them? See the bars? Okay. See them sitting right on the mid-band? Bars that can go into the band directly above the mid-band, which is called band 5 right here, is still considered a mid-band trade. Okay. Here's an example of another mid-band. This is an example of a mid-band trade where it's in the band just below the mid-band, which is line 4. So here's an example of a mid-band trade. Here's an example of a mid-band trade. Here's anywhere where the bars come into this area right here is called a mid-band trade. Now, in the live room, you might hear things like, was this a mid-band trade here? Yeah. Closed up into the line. Now, we'll talk about where exactly the entry strategy on this in a little bit. The key, what I find with a lot of traders over the years is we talk to and we teach and we learn and trade together, is that everybody wants to get in and start finding out how much money they can make. That's like the first thing most traders ask, right? Isn't that the most important thing? What do you think? Is that the most important thing to learn when you're trading? Like right out of the gate, how much money can I make? That's the first question we get asked all the time. What do you think? That's the most important thing, right? You got to know, am I going to make $500 today? I want to make $300 in the first half an hour. I need to know how quanto dinero is going to come into my trading account. What do you think? We're getting some feedback from the team. Chuck H says, no, you need to focus on not losing. That's good. Chandrich says, nope, that's not the money. You got to learn the technique. Good. Robert says, I love this. This is perfect. He says, I used to think that money was the most important thing to trading, but I've realized not anymore. That's not the case. Good for you. It's not the most important, Paul. That's correct. Money management, that's part of it. How to make it, how much to make. Trading correctly, David, that's good. Show me the money. Lower your losses. Excellent. Okay, good. All right. Well, technique. So, think of it this way. As we show you, if you think about how I am showing this to you, just back up for a second at a 20,000 foot level, what have we accomplished in the first 15 minutes? Well, we explain what we trade. Yes? You got to pretty much kind of know what you're going to trade. That's pretty important. But you certainly be up near the top, right? You have to understand on the chart what you're looking at. In other words, like what was one of the first things we did here? Is it an uptrend or a downtrend? So that's obviously right up there in importance level. So what we're doing is we're building a foundation, and then we're putting a framework in, right? And then we're building the walls, and then we put the second floor on, and then and we're all done with that, and we put the roof on. The roof is the money. So that's a good analogy, I think, for you. The roof is the money. So if you don't have a good foundational basis in what you're looking at, how to get in and out of these trades, these markets, you're never going to get the roof on, and you're not going to make any money, I assure you. So let's go back here. Let's go back here. As I get all negative about it, let's keep positive focus. So a minimum criteria here would be when a market, per our list here, closes above stealth and line 2. So let me ask you a question. How about these bars right here? Have they closed above the red stealth line and above the red thin line band 2? Is this a legitimate minimum criteria entry trade on the short side, yes or no? Per our criteria. Here again, we're not talking about like where you're getting in, how you take it, and how much money it made, and where you got out, and all that sort of stuff. It's a very simple question, just a yes or no question. Does that satisfy the definition of minimum criteria trade on the short trade in this little box right here? That's just a simple yes or no question. Good. Yeah, that's a minimum criteria trade right there. That's the definition of it. Closed above the sneaky snake red stealth line, check mark 1. Closed above line 2 on band 2, check mark 2. We are in minimum criteria territory. That's a good short right there, right? So minimum criteria, midband, 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 also a midband. Now, let me see if I can find an example of a deep retracement in a short condition to give you a sense of how that works. I don't see one on this chart. I have to go somewhere else in a trend to show you that. Oh, here's a perfect one right here. Well, maybe that's not a good example. I'll use it if I have to. Well, let's skip and look at one on the long side. No, I want to stay focused on the short side. Oops, I'm running out of data. Okay, I'll have to use this one. I'll just have to use this one. Yeah, I'm going to go ahead and use this one. Okay, as an example. I want to stick with the short side so that we're going to do, like I said, I'm going to do some exercises together here on the short side until everybody gets it, and then we're going to flip and we're going to start looking at the long side so we don't get all kind of crosswise. We'll make the long side the second floor. Now, this particular type of trade can be confusing to a lot of traders, okay? And let me explain it this way. I think this might have been a day or two ago here. I just wanted to use this as an example here. Obviously, you can see here's the thrust. Here's the minimum criteria short. Comes down, almost doesn't quite get a double bottom. Now, notice this retracement goes beyond the midband all the way up into this area right out here. Notice that you have bars closing out at line 6 and they've actually turned blue, the other color, the background has changed to a different color, and you're actually getting green stealth lines here. Now, deep retracements, in this case, you can see that all this was short covering for these people. This is not buying. This is not a trend change. However, many traders have told us that since the bars turned blue and the background changed, it looks like it could be a possible trend change. So when I say that, what I mean is deep retracement trades aren't necessarily for everybody. Okay? We're going to teach them. It's one of the three we teach, and we show, and we show them in the room, and we call them in the room. But if for some reason in a downtrend you're not too happy about how this looks, and you're nervous about shorting this because you think it might bounce and run off and stop you out because it's a trend change, we totally understand that. Now, in this case, it was a short trade that worked out nicely. That was a beautiful short. Came almost to the swing. And then sure enough, you turn around and you get a mid-band trade right after it. So, a lot of times this will happen. If you miss the deep retracement, not always, but a lot of times there's a secondary spot to get in. Yeah, that's all this is short covering, Robert. That's all this is. So just to be clear, and so everybody's on the same page here. So when people are short from institution market participants are short from upper levels, the way they take their profits is they cover their shorts, just like we do, right? Now, when the short covering occurs, it creates an upward draft because the sell programs are no longer selling, they're reaping profits, so it pushes the market higher. That's why you get these retracements. This is profit taking on the shorts. That's all this is, okay? Now, if the market did something like this, where it came up and did this behavior, came down, landed in the mid-band with a higher low, and then did something like that, this would be a bona fide trend change where you went from sell programs to buy programs, and this is actually buying occurring here. Okay? Buy programs have taken control. The selling has stopped, and normally upward rallies start with short covering until it reaches a tipping point where the buy programs come in and start to push the market higher. And we'll look at a good example of that here from today. It happened this morning right at the open, so I'll show you that. All right, now before we move on, I'm going to do a quick pop quiz. I'm going to show you some trade setups and ask you what they are. And I'll start off with some easy ones, okay? I'll just do a couple easy ones. And I'll just, here what we're going to do is we're going to do maybe a quick handful of trades. I'm going to make them all short, so you don't have to worry about the direction, okay? And then you're going to have 5 seconds, and these are yes or no questions. So it'll be like, is this a mid-band trade? And you type in a Y, boop, or an S, or an N, no. Okay, here we go. Trade number 1. 5 seconds on the clock. Is this an example of a mid-band trade, yes or no? 4 seconds. Just hit the button. You should start looking at these and just go, okay, yes, boop, no, boop, Y or N. 3 seconds. Is that box a mid-band trade? 1 second left. Type in your answer, please. Time's up. Yes. Yes, the bars, this is a definition of a, now, of course, it didn't work out and make hardly any money. Maybe you got a scalp, maybe you stopped out. That's not the point. The point is, was it a trade? And the answer is yes. The bars are located in the defined area of a mid-band trade, and furthermore, some of them are actually sitting on the mid-band itself. So that was a big yes. Okay, let's do a couple more, and then we're going to move on to the long side. Make sure everybody's on board with this program here. Let me get some more data on this chart. Hold on 1 second, please. Running out of data here. Oops, wrong thing. Let's put 10 days on here. There we go. This market just kind of moving around here. So that gives us enough data to work with. Okay, give me a second. It's loading. Any questions on this? You know, I think what I've learned, is that sometimes when you start looking at something and it's completely new, and it seems like a lot to take in, and then when you look at it a few times and you get more comfortable with it, it starts to make a lot of sense, right? It just starts to make a lot of sense, and you can figure out pretty quickly what the program is there. Okay, ready for number 2? Is this region box that I'm drawing right now a midband trade, M, or a minimum criteria, MIN? Is the box I just drew a midband trade, M, 5 seconds on the clock, or a minimum criteria trade on the short side, we're still trading shorts, MIN, 4 seconds? It's either an M or an MIM, MIN, meaning for minimum. 2 seconds, short side trade on a retracement. 2 seconds. Time's up. Now, hey, by the way, I see a lot of people came in late. Hey, Kathy, Bruce, a lot of people just coming in a little bit, getting around a little bit late today. Don't worry about it. This is recorded. Everybody will get a copy tomorrow morning. It'll render tonight. We'll get it up on the website. Everybody gets a copy. So don't worry. If you came in, if you got to leave early, you got a commitment or some dinner or whatever, just don't worry about it. You'll get a full copy of this, okay? Yeah, so our definition of the short side minimum criteria is it's got to close above stealth, check mark 1, yes. Close above line 2, thin red line, check mark 2, yes. They sit right in band number 3 above the line. That is a minimum criteria. Some of you typed in an M for midband. Maybe you forgot the IN. The midband trade has to be up here, remember? Midband trade has to be there. All right, are we good on the short side? Is everybody ready to start looking at long side trades? Let me skip to this morning and start looking at long side trades. We're going to do this, everybody ready? Anybody not ready? Anybody need any more explanation on the short side? Yep, I'm okay. You good to go? All right, cool. All right, cool. Good. Now, there is a couple of exceptions to this. And they are, I want to explain, and I'm not going to get into a lot of detail so everybody gets all sort of confused about, well, he said this, and then he changed it to that, or whatever. If you are in a pre-market session, if you're in the trading market session itself, or after hours, or wherever you're at, there are times when markets can change direction. They can occur at the market open, right here at 6:30 Pacific, right? And so in this particular case, you would draw a region box using the Object Trader tool and enable both sides. Even though at the time, technically speaking, when that box started to form at 6:30, you could make the case you were in a short condition and that you should only be looking for shorts. What I'm trying to say is that the open or major news events can mean trend changes. And so it's perfectly acceptable to allow the market to go either way. In this case, we said Gary actually physically drew this box on ES. Does everybody remember it? If you were in the room, do you remember this box? I drew it. I took this trade. Gary took it. We put 4 contracts on here. I took 4 lot, and I was filled long on this bar right here. Right there. So some of you might be not know what I'm talking about, Object Trader. What the heck is he talking about? Is that some kind of like Play-Doh blocks and you put blocks together? No. We have a semi-automated tool that is in a panel over here to the right. I'm sure you've seen it in other webinars, and Gary shows it in the live room occasionally. It allows you to draw a region box around engulfing candles, normally right around the midband. That's our go-to trade. And then when the market closes outside of it, it fires a market order on a close of the bar. In this case, it was up, so we're filled long on the close of this bar on ES, and let me give you a level so you can see what I'm talking about, right here at 22 even. Robert, you took that trade too? You made good money on it? Okay, good, perfect. So everybody understands what's happening here. Now, you know, if the opposite had occurred, okay, if you enabled both sides of your region box and the market closed down and continued the downward trend, you could be filled at 18 and a quarter and you would continue the short side here, but that's not what happened. Okay, that's not what happened. It broke to the upside, to the long side. All the markets were heading up. We're going to look at Russell today too. Russell had a monster run. NASDAQ had a huge run. YM just took off at the open. All the equities ran like big dogs. Now, the way we like to play this is that you put the amount of contracts you want to enter here. You have an initial stop that is placed automatically by Object Trader, normally 8 or 10 ticks below the entry, so that would have been down here. Sometimes the way we teach it is that once the market moves in your favor by, say, 6 or 8 or 10 ticks, you take off what's called a scalp, which means you peel 1 or 2 off and take profits. And then you take your initial stop here and take it up to at least 1 or 2 ticks behind your entry as you begin to trail. Now, I'm not going to get into a lot of the follow-up on that. We have other webinars that teach you how to do all that. I'm going to focus more on where we would have got out of this trade and where we re-entered it, okay? Now, in terms of the trail, let me go back here and I want to type in something on the long side before we actually start doing this. And I'm going to do it very similar to what we did on the short side. So we're going to say if you are in what we call an uptrend, which of course is the opposite of the downtrend, you're looking for pretty much long trades only. On retracements, here I'll just say long trades only. And of course, the first one is always our midband. So how do we take that? We take it on pullbacks or retracements. I'm just going to go RT for retracement. Back to support, hit the midband, and you get a bounce to get long. We're going to look at that, okay? 2, there is a minimum criteria long trade, which we're going to look at here, right? Minimum criteria long trade. And that has to close below the green stealth. And line 6, the green thin line 6. And we'll look at that. That's trade type number 2. And then you have also, just like the short side, we have what's called the deep retracement. I'm just going to go RT on that for the long trade. And that can come all the way to line 2 and bounce. We're going to look at that too. Line 2 is the thin red line, so it's coming deeper in the opposite direction. And you might actually get bars turning red, and we'll look at that condition too. Can come to line 2 and bounce. Now, one thing I wanted to say here on this is each word in this definition of trade types is important. Okay? And a lot of traders discount what they're looking at, and they just sort of gloss over it and say, oh, okay, well, basically, things going up. And he's saying, we're going to pull back, and it comes, we're going to come to this thing, and then we're going to try to get long. Well, there's more to it. So notice how on here, on each one of these, we say midband, it comes to the midband on retracement to support and what? What's that B word mean? Deep retracement. It'll come all the way to line 2 and what? Bounce. This is important. And why do I'm saying that? Because you don't blindly, we're not just saying blindly if it comes to the midband, you just go ahead and put a buy order there. That's not how this works. You've got to look for the bounce. That's why we draw the boxes. In other words, let's say in the case of this short right here where it's coming up, we don't just go in here and put a blind limit order up here. Sell. We don't do that. Okay, you don't do that because it's quite possible it could bounce, but it's a roll, and then you get a trend change and you get fully stopped out. Now, that being said, is the region box is our preferred entry method because of the way that it puts the stops in, puts the trails in, puts the target in. Once you finish that box, you're done. OT takes over. Now, you might say, well, Charles, can't I just put a limit order up here with 2 lot and let it get filled? Yes. That's another way to get in. Yeah, you can put limit orders in here, no problem. The only thing is that when it comes to putting, managing your initial stops, putting in some targets on scalps and runner targets and all whatever, and then managing your trail, what have you, you're going to be doing that all manually. So, it behooves you to try to learn that tool. It might take you a little bit of time to learn how to use Object Trader, but trust me, it's worth it. Okay, is everybody on board with how to take the long trades on the uptrend? Okay, all right. So in this case here, what we did was, if you notice, and normally we have a looser trail, but we got bipped out of this trade right up here. Gary and I were trailing it a little bit too tight, and which is uncharacteristic of what we normally do. We normally leave it, we say fade that. So in other words, no, let me just show you this right here. So in the case, see how it's walking up here? See how the green stealth line is following the market? See how the thin green line of line 6 is following the market? So what we say, as the market's moving up, you want to fade line 6 by 2 or 3 ticks. So in other words, as you trail the market up, you're not going right on the line. You're not right here, because you can get wicked out of a trade and leave 40 ticks on the table. You don't want to do that. You want to leave it a little bit loose. In the case of here, we'd run 40 ticks, so we wanted to lock it down, so we got stopped out right there. Right here. And then we left this on the table. This was the last sort of leg that we got bipped out of. All right, so let's look at how much money this trade made. Let's say hypothetically, we usually round numbers, so I don't get the calculator out here. You got filled long at 22, and you got out at let's use a nice round number, 35. That's 13 handles, 13 points. How much is ES worth per point? Jai, you can have Object Trader access. You can trade it in Sim in the free trial. If you sign up for a free trial, we'll give you fully working all the indicators, the tools, the charts, OT. You can only trade it in Sim. You can't take live trades with it, but you can learn how to use it. Yeah, so it's $12.50 a tick, 4 ticks per point on ES, right? So it's $50 per point, $12.50 a tick. So what is this? 13 points is how much? 13 points times 50 is how much if you put one contract on here, right? So we had one long equals 13 points, and one contract, which in the jargon we use is what we call one lot, times 15 is, yeah, $650. 2 contracts would have been 1,300, even, yes? Now I had 4 lot on, so you can do the math. Now, this trade lasted from 6:30 right at the open to approximately 7:04, so right around a half an hour. And the numbers I'm representing here do not include any kind of slippage or commissions. I'm just showing you round numbers that, of course, if you got filled here and you went here and you had 1 lot or 2 lot or 4 lot, that's how much money you would have made. Now, how many of you, if you made 650 or 1,300 on the first trade in the first 34 minutes, would be done trading for the day? If you hit that. 1 lot 650, 2 lot 1,300. Filled long on this bar right here. Trail your stop. Stopped out right here at 35 even. How many would you be done? We have a term for this in the live room. It's called a one and done trade. One and done, meaning that you've located a good low risk, high probability entry trade. You pull the trigger. You manage your targets and your stops to get out, and you're at or above your goal for the day. That's called one. Okay, many of you are saying I would be done. Good. Now, let me ask you a question. Let's say that you weren't done. In fact, let's just say hypothetically, you were making some coffee and you wanted to get some toast. You wanted some avocado toast for breakfast, so you were carving up an avocado for the first half an hour. You come back, you got yourself some coffee. You're chomping on your avocado toast. Here you are at, you come back in here and it's 6:41 and you see the market's up here. You logged into the live room. We're already trailing our stops. You see that the entry was down here. Now, what can you do? Give up? Turn off the machine? Go home for the day? What do you think? Let me ask it this way. Let me ask you a question this way. Let me ask it this way. What is this right here? Is this a legitimate minimum criteria trade per our definition for long entry on ES? Yes or no? What say you, team? That little box I just drew. Is that a bona fide ES long trade entry? Yes or no? 5 seconds on the clock. Here's our definition over here. It's right to the left. We just put it in here, right? For long trade entries. 1, 2, 3. There's the 3 trade types, right? 4 seconds. This box. Right here. Now, look, I understand some of you are completely new. So, you're probably just trying to understand what all this is, sort of embrace it and take it all in. And that's totally cool. No problem. Don't worry. If you're still kind of trying to understand what you're looking at here, don't worry about it. But yes, the answer is yes. Notice we close below line stealth, the green line here, right? Check mark 1 for stealth minimum criteria. And we come below the thin green line 6 into this band right here. So that meets the 2 criteria, and so this is minimum criteria long. And we took this in the room. Remember? I called this out, and I got filled long again on that bar right there. Right there. I got filled again long. Now look at what a monster trade this thing turned into. Okay? Look at this. Look at this thing go. Now, depending on the tightness and looseness of your stops, let's say that you were able to ride this thing all the way up to here. Let's say you stopped out somewhere in this area right here. All right, so let's use some round numbers. Let's say you were filled at 38 even, roughly, on the top of that bar right there. And you rode it to 53. 53 minus 5350. I'm just going to round it to 53. 53 less 38 is how much? 15 points, right? So here's trade number 2, long. $15 points, 15 handles, right? So how much is one contract worth on a one lot? How much did you make on that if you wrote it all the way up for 15? What's the number I should put in here? Anybody? 15 times 50 is how much? Now, let's suppose that you've finished your avocado toast here at 7:24. Was there enough time to take this trade? I mean, people always say, well, Charles, I tell you, in real time, you armchair quarterback sitting all comfy in your nice chair there in California, you're saying that you're going to take all the manner of good things. But, what about in real time? Huh? These bars are coming at you in real time. Well, how much time did you have to make this trade? Well, let's see. It came back here at 7:16. Is where these bars started to form, AM Pacific, yes? And it didn't break out until 7:25. So how long did it take for this box to form? 7:16 to 7:25 and change. 1, 2, 3, 4, 5, 6 bars. Broke up on the 7th bar. almost 10 minutes. Now, all due respect, and we were in the room calling this out. I called this box out. I said, it met the minimum criteria trade. I'm looking to get back in here. And I put another 4 lot on right there. Rode this thing all the way up. So you can do the math on that. It was a very good morning today trading. That's all I can say about that. Now, let's move on. Anybody else catch that? I know, Robert, I think you did. You caught one of them, maybe both of them. I know Gary caught them. I don't know if he caught that second one. I know he caught the first one. I think he was trading oil at the time. All right, last question on ES, and then we're going to shift to another chart. I want to get to Russell and maybe try to pop a little bit of crude up here. You can learn to, the point I'm trying to make is, you know, there's normally, you know, unless you're in a fast-moving market like NASDAQ where it's spazzing all over the place and the bars are flying all over the place, and that's why we don't have it in the room anymore. When those algos get pumping, okay, you start pumping on YM. Remember, we had YM in our room for years, remember? And all of a sudden the algos kick in and start trading it. You can't compete with that. ES is nice and smooth, methodical, heavy institutional trading. They respect swing levels. They respect the midband. It's beautiful. If you want to trade an instrument, I strongly urge you to look at trading ES. Now, we come back. We're getting a retracement here, and the bars are turning red, and they're sitting all the way down here. Now, is this a trend change? Yes or no? Got red bars. Background has changed. Red stealth. Took out the midband support level. Is that a trend change on ES? This would have been right about 9:30-ish. Yes or no? 5 seconds on the clock. Okay, is this the thrust in the opposite direction? It's no longer up anymore? There's a thrust. You said, Charles, red bars and change of color. Maybe that's the start of a downtrend. Maybe we should be looking for some shorts. Shorty time, get out your sell button. What say you, team? Is it time to start shorting this puppy? Good observation. Kathy says, wait a minute, the midband's still blue. Didn't take out the swing. Yeah, no, you can make the case that there's still a little bit of a swing over here that is holding. I would agree with that. You mean like right in here? Yep, that's true. Yeah, he took midband, but the sports still bullish, Greg? Deep retracement, Mario? Still get long? Okay, let's look at our definition number 3 of our third trade type of a deep retracement, in this case in an uptrend where we're looking for longs, yes? Here we said that the deep retracement can come all the way to line 2 in an uptrend, and when I wrote this, I said possibly, I didn't put this in here, the bars could turn the other color, right? Sure enough, look at this. It's come all the way from the fresh high up here at 56.50, paused at the midband. Now, if you box this in, did you ever get filled? So if you're saying, well, that's a legitimate midband trade, I would agree with you. But if you put a region box on it, did you get filled? No, it never broke up. So you could make the case, yes, that's a legitimate midband trade. And you could have put a box there, but it never filled, so it continued lower. So now you take and you start looking down into here. These bars actually came and sat physically on line 2, right at 9:35. Now look what happens. What happens to that trade? Takes off like a little bird. Look at that. What do you think? Now, look, here again, I have to put the caveat in here. If, you know, when this is happening in real time, I understand the psychology behind it. And we understand it too. We know that deep retracement trades are not for everybody. You know, maybe you put the midband box on here. Maybe you took 2 trades and you were done, okay? Maybe you missed these 2 trades and you're looking for entry. You did put a midband box here, but it never got filled. So that was a legitimate trade, but it never went anywhere. It comes down here. This is the entry down here. for a deep retracement trade. Now, I want to reiterate something. If this was to turn out to be a legitimate trend change, then you would have seen what? A push to the mid-band area, perhaps slightly above it or below it, and then a kiss and roll, and then you get a deep dive and you start getting a thrust in the other direction. The bands turn down, just like you saw in the other thing, right? You know, background turns red, bars are predominantly red, and now you've trend changed down. But obviously, of course, this did not happen. So the trend is still up and you're looking to buy. Okay? That did not happen. Now, I'm going to do 2 more questions, and then we're just going to get off of ES. That I got to pop some other stuff. Any final questions? Yeah, Robert. Yeah, when the markets are strong and the buy programs are pumping and the algos are up or down, as long as these runners, you got to milk the runners. This is where a lot of your money in trading is going to be. You can scalp ranges, okay, especially with ES. ES can, if you're in a 10, 12, 15, 20 tick range and you see support clear, you take longs, take shorts, you can scalp it. But a big chunk of your money is going to be catching these big runners and leveraging up if you can. Put at least 2 lot on it and ride as best as you can. Yeah. All right, last question on ES. Okay, so you for some reason, your dog was barking. You had to go outside and take him or her for a little walk, take care of business out there and what have you. And you come back in and, you're looking at the market. You saw, you choked on your avocado toast, so you missed all that. You thought you were going to get this. You go step outside, you refresh your coffee, you come back in, and the market looks like this. Over here. I want you to focus your eyes over here. Your dog's happy, your stomach's full, you got a fresh thing of coffee there. Can you enter ES right in here on the right-hand side of the chart at 1038? Is this a legitimate long trade entry? Right over here, where my cursor is. You're in your happy place. Does this meet the criteria for a long trade entry on ES? Yes or no? Okay, forget about all this stuff over here. That's all done. And you missed this. You were outside with your dog. But now you're back, and it's 1038. Is this a legitimate long trade entry on ES? Yes or no? 4 seconds left on the clock. Type in a wire and in based on what you know. I have the definition right over here. I mean, if you are having trouble remembering what it is, we can just, the definition of it's right here. I mean, how to make it any more clear what it get in it or not, and just have to look and do the bars meet it or not. That's basically the question, right? So here's the mid-band, 3 types of trades. Uptrend, we're looking for long only, yes. Mid-band, we talked about that, minimum criteria, and deep. So are these bars meeting any of those 3 entry criteria? What do you think? I'll give you 2 more seconds right here. What do you think? You're all happy, tummy's full, dog's happy, coffee's all nice and toasty. Time's up. Yes. Has to close below the green stealth and line 6. And so have these bars closed below the stealth line and line 6? And the answer is yes. That's a legitimate entry in the event that you missed the deep retracement trade. Does everybody see that? And of course, you can see that the market just took off and ran like another big dog right there. So there's just monster long trades everywhere on ES today. Look at that pop. Even from here, that's probably another 13 handles. 2 lot on there is probably, $1,200 right here. Depending on where you got in and out. All right, we're almost out of time. We can look at one more chart. Let's take a vote on either the Russell or crude. I can only look at one. And so whatever the team votes for, that's what I'm going to put up next. And we're going to wrap up with that chart. So either CL, crude oil, or RTY, which is the Russell, E-mini Russell futures. What say you, team? Whichever the cast the vote. There's no what do you call that thing there? It's not the vote. What's that thing called again? For the electing the president? Oh, electoral. There's no electoral college here. Whatever, we're going to add up the votes and whatever it is, that's what we're going to do. I see a ton of CLs and I only see a couple of Russells. All right, so it looks to me like we're going to be looking at a crude chart. Okay, no problem. I'm going to tee it up right now for you. Now, if you notice, crude is $10 a tick. You know, crude has really settled down over the years. If you remember, crude used to be pretty wild child. Remember, you traded it years ago. I'd say literally in the past probably year and a half, 2 years, it's really kind of come into its own. You get good volatility, which means you get good movement, good chance to make money on it. It's starting to respect the midband and swings a lot better. You still get some choppy days occasionally, but you know, there's days on inventory where you get some big runs. Gary opens the room right before the pit open. Let's look at a couple of trending days here. Today was kind of choppy. Okay, for you crude traders, okay, I'm going to ask you a question. Ready? You crude traders, this question, see how good your crude knowledge is. What is this right here? Is this a heart defibrillator reading on a patient? Well, how to get on a crude oil chart? What is this? This was, what time was this? 7:30 yesterday. Is this a defibrillator on a heart patient? Or did something happen here? Crude oil, you crude traders. What say you, team? What the heck is that? That's my blood pressure before I take meds. That was inventory. Okay, so the point here is, you got to stay out. And we always say usually a couple of 5 minutes. Now, I'm going to do something a little bit different with oil. Okay? Yeah, it's a seismograph and there was an earthquake. All right, I'm gonna advance the chart on crude. We're gonna go back to let me see. I want to go back to early yesterday morning. Yeah. Okay. And you don't have to type in. I'm gonna advance the chart like we're watching crude together in real time. Let's reconstruct the price action in real time. We're gonna test your knowledge of trade entries. Okay. You don't have to say long or short. What I'm going to do is I'm going to advance the chart in real time like we're kind of watching it together, okay? And then how this is going to work is when you think you see a trade set up on crude, you type in the letter T. Are you ready to start? Good. Here we go. We're going to be looking to the right of this line. So I haven't started yet. Don't type in a T. I'll tell you when we start. Here we go. This was yesterday early morning in the European trading session. Here we go. It's 2:35 a.m. Pacific. Let's blow it up a little bit here. Remember, you're typing in a T when you think you see a trade on crude. Okay, here we go. 2:55. Coming up on 3 a.m. Pacific, so this would have been a couple hours into the European trading session. Okay. All right. There's 3 o'clock. Okay, there's 3:30. This is for you night owls. It's 3:45. Okay, here we're at 4:30. Let's get the bars really super huge. 4:36. Yeah, right. Yeah, 4 o'clock. 4:36. So you're 4 hours into the European trading session, looking for trades. You call them out when you think you see them. Type in a T. Okay. It's 4:37. 4:38. Coming up on 4:51. Coming up on 5 a.m. Pacific time. Getting ready for the crude pit to open here in just a few minutes. All right, I'm going to stop it right there. Now, if you recall, in the first half an hour of this webinar, we discussed in detail when you're in a short condition, or when a market makes a thrust, the first trade type we look for, and don't worry if you're still learning this. This takes a little bit of time. You know, it's muscle memory. You have to look at it, see it again, trade it a little bit in sim, look at it, trade it again, you know, and then all this will start to become really clear to you. Now, looking back, in case you didn't see the trades, you can see that a midband trade set up on crude right here. That was the first trade, right? You can see that we had a thrust in the down direction. We come back to here. Could you have boxed this in either way? I would say yes. Simply because this is an opaque background, and there, you know, at the time that box formed, there was an equal chance that it could have gone up, but it didn't. It went down, and that turned out to be a beautiful short. You were filled short on the close of one of these two bars right here, depending on how and where you drew the box. You probably stopped out of it here in this close of this bar right here above line 2 in stealth. So that was your first short trade on crude. Some of you caught it. Good. Kudos. Gold star. If you're still learning, don't worry. Now that we look back, 2020, hindsight's 2020, right? Look, how about this right here? Is this another mid-band short entry? Now that you see it, yes or no? What do you think? Yes. Obviously, yes, it is. Now, by the way, and I want to put a small caveat in here. Some of you typed in a T symbolizing a short trade when the market was down here. Now, I just want to be clear about this. This is not after you, and you got to fight this. You got to fight the resistance to do this. And, you know, I understand fear of missing out. I know the psychology on why you take these trades. It's going down, down, down. You're convinced it's going down. You pull the trigger short. You're filled near the bottom. See it all the time. Only to get stopped out on a full retracement, comes up, kisses and rolls, and the short entry was here, but you're getting stopped out because you got in down here. So if you're doing that, you got to try to really break that habit. That's going to get you. Okay, that's going to get you good. Try to break that habit. Yeah, so here was trade entry short number 2 on crude. Filled probably on the close of that bar there, depending on how and where you drew it. And then, you know, you got a scalp out, and then it didn't turn into anything, and there's a trend change. So, good. All right. Any final questions? I'm going to stop the recorder. I think that's a wrap. Thanks for sticking around. We went a little bit over tonight. Appreciate everybody coming.